Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena. Well, this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technical charts. But first up, let's take stock of how the markets are shaping up. Well, it is a day of recovery today. In fact, we are shrugging off those weak global cues. In fact, we're sitting pretty above the 23,000 levels on the Nifty. We are sitting at the highest day of the day. In fact, we're up 200 points on the Nifty right now. Nifty Bank is where the real action is. In fact, we have snapped the two-day losing streak on Nifty Bank. We are trading with gains of over 1,000%. We are up 2% right now. Of course, on the back of that big RBI stimulus that's come in for the bank and the entire financial sector. All the financial names are buzzing away in trade. In fact, Citi says that it's a big positive. The liquidity infusion by RBI is a big positive for HDFC Bank, Axis Bank and Bank of Baroda. And if you look at all those banks, they are trading with solid gains of almost 3 to 4% in trade today. But if you look at the tech stocks, they are also making a bit of a recovery, very, very marginal. Of course, the massive bloodbath that we saw on the US NASDAQ, of course, after the DeepSeek news coming in and Nvidia wiped off its $600 billion of market cap in a single session, which has been the largest blow to any stock in US history. But nonetheless, back home, we are seeing at least a if you look at Infosys, that's up 1.2%. LTI Mindtree, Tech M, these were trading in the greens, a very, very marginal recovery, at least coming in on IT stocks. But what's taking the cake home is really the realty pack that is gaining some ground after 2-day losing streak. Nifty Realty is firing away on all cylinders. It's up 3% in trade today, and it is also the top sectoral gainer for the day. So Nifty Realty is doing pretty well for itself. Let's look at some of the individual movers also. We have Tata Steel, we have Coal India, Piramal Enterprises that's buzzing on the back of its earnings. Balakrishna Industry that reported its earnings yesterday. Nomura has now come up with an upgrade, and Balakrishna Industry is also firing away in trade today. So these are some of the individual movers, moving away in the trade. But let's get on board Osho Krishan, who's a senior analyst, technical and derivative research from Angel One. Joining us on the technicals and from our research team, we're joined by Ria. Hi, good afternoon to both of you. Thank you so much for joining us. And let's get started with all the stocks that are in focus today. First up is Tata Steel. It's an earnings candidate, and if you look at the numbers have been above estimates. Most of the numbers, the low cost aided the numbers. Margins are at 11%, much better than what the ET poll was expecting of 8.9%. European losses have narrowed sequentially. This is also something that we were expecting. The net debt has come down to positive, and sequentially subdued steel prices continue to weigh on the numbers. As far as the brokerage notes are concerned, JP Morgan is maintaining an overweight with a target price of 155 on Tata Steel. They feel that the EBITDA beat on lower than expected other expenses is what led to the EBITDA beat. Net debt reduction is a big positive for the company. The earnings surprise led by both India and the US business was a big positive, and average selling price is slightly better than what they were expecting. On the back of that, JP Morgan is maintaining an overweight on Tata Steel. Morgan Stanley is maintaining an equal weight with a target price of 160 rupees. Good show in domestic business. UK business performance was in line, and other geographies also did pretty well. The lower freight handling and repair costs have aided the numbers for Tata Steel, and on the back of that, Tata Steel is doing pretty well for itself, holding on to gains of 2.5%, trading at the highest day of the day right now. But let's move on then. On the charts, I'll come to you, Osho. You've picked out Piramal, and you've picked out Bajaj Finance for us. I beg your pardon. Bajaj Finance, in fact, this one is set to report its earnings tomorrow, and in fact, we are expecting some healthy set of results from Bajaj Finance, on the back of strong AUM expansion and stabilizing names. In fact, on the back of that, we do see the stock up in today's trading session. Also, it's up almost 4% in the last 1 month. Also, it has given some stellar gains of 11%. Tell us from the charts, what do you see? Do you see this the Bajaj Finance giving us more gains now in the short term?
Firstly, very good afternoon to all of you. Well, looking at the technical perspective of Bajaj Finance, then this counter has been hovering above the 20-day exponential moving average from quite some long time, and was consolidating around the zone of 7,400, 7,450 odd levels. But in today's trading session, there has been a very strong breakout in Bajaj Twins. Bajaj Finance specifically, if I have to say, then 7,450 was the major trigger point from where we have started gaining strong traction in this counter. So I'm expecting that there is a very strong momentum in this counter, and I'm expecting that in the short-term period, it can retest the zone of 7,800. So overall, the technical perspectives and the parameters are looking very positive for this counter. And on immediate basis, nearly 200 points of rally can be seen on a very short-term perspective. While on the lower end, 7400 followed by 7300 should be cushioning any kind of shortcomings in the coming period. So overall, the range for Bajaj Finance is 73 to 7800 with a bullish biasness for short-term perspective.
Right, a bullish biasness as far as the short-term perspective is concerned for Bajaj Finance. But moving on to another earnings candidate, that's Siemens. That was trading with gains of 2%, but has given up those morning gains. Ria, tell us what does the report card look like for Siemens?
Well, yes, UBS has come out with a note on Siemens. They've upgraded the stock to a buy rating from their earlier neutral rating, and they now have a target price of rupees 8,000 on the stock. They say that the business mix is more diversified and resilient than its peers, and the consensus is not pricing in the potential from the strong global energy cycle. They've also said that the favorable risk reward is trading at 55x on UBS's FY26 estimates EPS, and the recent de-rating has been due to the muted government capex rather than concerns on ordering and earnings. Right now, as you said, the stock has given up those morning gains of 2% and is trading with cuts of 1.7% as we speak.
All right, UBS upgrade coming in on Siemens that has given up the morning gains that we saw coming in on the stock. But coming to you from the FMCG pack, you've picked out Britannia for us, Osho. Tell us what are you seeing on the charts for Britannia? I mean, in fact, today it's down almost 2.5% in trade. Last 1 month, 5% gains, but it has been largely in a very in a corrective phase in the last 6 months. So from now on, you see the stock moving now?
See, overall, there has been a very strong correction in Britannia from the zone of nearly its peak of 6,400 towards now 4,700 odd levels. But in this month, we are witnessing a kind of a rounding base formation for this counter, even on the technical parameters and the price action. Also, there has been positive development that the counter have surged above the 20 and 50-day exponential moving average. With the formation of rounding bottom, I am expecting that there can be a gradual up move in Britannia in the coming period. And January being a month of a strong correction, Britannia managed to gain approximately 5-6% from the lows. So I'm expecting that in the coming period, it has a potential to retest the 200-day simple moving average, which is nearly 5,400 levels. And once it surpasses the zone of 5,400, then we can see a strong bullish traction from short to medium term time frame. But for now, 4,900 to 5,400 is the immediate trading range, with again a bullish stance in Britannia.
All right, another bullish stance coming in on Britannia. But coming to you, Ria, ACC is the name that you picked out for us. In fact, that one is also doing well for itself. It's trading with gains of almost 1% plus. Tell us, there are brokerage notes that have come out on ACC. Tell us what do the brokerage notes say on ACC?
Well, yes, two brokerages have come out with notes on ACC. First up, CLSA has maintained its outperform rating with a target price of rupees 2,580. They've said that Q3 has been below estimates and exceptionals are going to help boost earnings going ahead. These exceptionals include reversals of provisions and excise duty refunds as well. The higher sales have been seen from acquired entities. Investec has also come out with a note on ACC. They've maintained their hold rating with a target price of rupees 2,845, saying that on an adjusted basis, the company has reported a miss on the EBITDA, but we have seen a positive impact of volumes negated by lower spreads. They are factoring in the growth pipeline, the lease expiry and promoter interest is also going to be a key factor to watch out for, and they also prefer Ambuja Cement over ACC going ahead. So that's the lowdown on ACC, and the stock is up around 1% as we speak.
All right, the ACC trading with gains of 1%. But moving on to, ahead of our union budget that we're expecting on the 1st of February, Preetam Kumar, who's the partner of Deloitte India, talks about taxpayers' demand for technological reforms to make the process of tax compliance smoother and much simpler. Let's go across and listen into what he had to say.
Historically, taxpayers have always been talking about big ticket items like use of artificial intelligence and blockchain in tax, as well as introduction of the standard audit file for tax, or SAFT, as it is popularly known. Now, these remain very, very relevant for the medium and long term. But what is interesting is that the taxpayers' expectations around technology are now very focused at the micro level on the short term. Now, what do I mean by this? Taxpayers today want the tax administration to use technology for the tracking of appeals that they have filed, for understanding the processing and the status of any applications that they have filed for rectification or giving effect to appellate orders, around grievance petitions, things like issuance of refunds to taxpayers, deletion of demands, the reconciliation of data which taxpayers have submitted vis-a-vis what is available as per the tax department's records. There's a wide area of things at the micro level is what is the expectation from taxpayers. Now, interestingly, and the good thing about this is clearly aligned with the vision of the tax administration as well. The finance minister in her budget speech last year had actually talked about these things around making all the processes paperless and improving taxpayer services by embedding technology. Incidentally, she talked about rectifications, applications, and order game effects, etc. So I think that's it's a great convergence.
Right. With that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back with some more stocks that are buzzing in trade on the other side. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. Let's get started with all the stocks yet again. Then Osho, coming to you now. Osho Motors is the name that you picked out for us. Osho, the entire auto pack. This one name really stands out because Eicher Motor has given more returns than any of the auto players in the last 1 year. Going ahead, do you see the performance to continue, at least as compared to the other auto players? Eicher Motor has done pretty well for itself.
See, overall, technically, in this current month, this counter have seen a very strong breakout. On the day of 2nd January 25, it has given a consolidation breakout of 5,000 zone, and from there onwards, it has seen a very strong upsurge, nearly 53, 30, 40 odd levels as a peak. But from there onwards, the counter have even corrected to retest the neckline of the breakout zone. So I'm expecting now it's again providing an opportunity to accumulate this counter for again the higher targets of nearly 53.50 on the short-term perspective. But the time it breaches the same, then we can even eye for 5600 kind of a zone in the near period. So I'm expecting that the bullish momentum in this counter should continue, and looking at the overall space, this counter has been placed at bit a higher zone. So I'm expecting that there can be a strong momentum in Eicher Motor in the coming period. So one should definitely try to accumulate it for 53.50 as a near-term target, followed by 5600.
Outlook coming in on Eicher Motors, the upper target being 5600. But moving on then to another counter that is in focus today, and that's IGL. The shares of the company dropped nearly 3% in morning trade. In fact, it dropped 3%, but they recovered from the lows. Like you can see on the chart, there's some buying that came in after that drop in the morning. It's now currently trading at 1.5% up. Well, this is on the back of the Q3 results. Now, the company has reported 31% year-on-year decline in consolidated net profit. That came in at 325 crore rupees for the quarter, which ended in December 31st, 2024. Well, the company's net profit in the reported quarter marks a sharp decline from the earlier 475 crore rupees net profit that was reported on a year-on-year basis. Well, IGL's revenue from operations in Q3, however, rose around 5.6% on a year-on-year basis to 4,146 crore rupees. The company's revenue from operations stood at 3,926 crores in Q3 of FY24. So, if you look at the profit and revenues, there has been a disappointment on that. The fall in the net profit can be attributed to the government cutting the APM gas allocation for the city gas distribution players like IGL. The company's CNG sales volume rose 6% on a year-on-year basis, while the natural gas saw nearly no gain or loss in terms of sales volume. The company's EBITDA, however, significantly fell on an annualized basis. On the back of those results, the stock was down and out in morning trade, but has managed to recover from the lows in the morning. But coming to you, Osho, ICICI Bank is the name that you've picked out for us. Banking names are firing away on all cylinders, of course, after the the RBI stimulus. But ICICI Bank was an earnings candidate yesterday. Did pretty well. Healthy set of numbers coming in for ICICI Bank. On the charts, what are you seeing for this counter?
Strong reversal in this counter, especially after the quarter earning result. On technical front, the 200-day simple moving average was approximately around the zone of 1210, 1215 odd levels from where we have started gaining strong traction in ICICI Bank. And on the technical parameters, there has been strong positive crossovers from the oversold terrain. So all the parameters complies very well with the bullish stance in this counter. And I am expecting that in the near period, this counter can see a very strong momentum. Gradually, upside target is near about 1320 to 1340 odd levels, and I'm not very much aggressive that it will be reaching within few trading sessions, but gradually from here onwards there can be a decent upsurge movement in ICICI Bank again towards the zone of 1320 on very short-term perspective, followed by even the uncharted territory of 1360 in the coming period.
Osho, in fact, the stock is up 2.5% today. Also, this is the fifth straight session that ICICI Bank is doing well, specifically after the quarter three results that the bank posted. But moving on to another counter, which is buzzing, not buzzing, it's actually marginally up, marginally down in trade. That is Coal India. That's an earnings candidate for today. Ria, take us through what the results look like for Coal India.
Well, yes, the results have been quite in line in this quarter for Coal India. But on the back of this, two brokerages have come out with notes on Coal India. First up, Morgan Stanley has maintained its overweight rating with a target price of rupees 525. They say that this has been a largely okay quarter, and the volumes beat has been due to better realization. The share of FSA volumes has been lower due to muted demand from the power sector, and higher contractual expenses have been seen in this quarter. JP Morgan has also maintained its neutral rating with a target price of rupees 435, saying that the net profit this time around was largely in line, and we've also seen a higher than expected e-auction premium in this quarter. They do believe that investor confidence on production growth will be key for the stock price improvement going forward, and the management commentary on e-auction premiums and guidance on costs will also be a key factor to watch out for. So Coal India on the back of this is actually reeling under some selling pressure, trading with cuts of around 0.8% as we speak.
Alright, that's Coal India reeling under selling pressure. But with that, we're completely timed out on this edition of Market Fatafat. Osho, Ria, thank you so much for taking the time out and joining us today. Thank you. I will take your leave, but market action continues. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.